What is your exit strategy for your cryptocurrency investments? Today's video is going to give you a heads up on what you should be concerned about when it comes to cashing out your cryptocurrencies. If you want to sell your crypto for something like a stable coin or eventually to be deposited back into your bank account for dirty old fiat, this video is going to help you come to grips with the things you're going to have to understand. Let's say you have coins on a centralized exchange. You also have coins on, let's say, a hardware wallet or a Web3 wallet. You've been using some decentralized exchanges, but you want to cash out. Your investments are paying off. You have maybe some debts that you'd like to pay off. Maybe you have properties you'd like to purchase. And to do so, you have to exit back into the fiat world. There are a few things to understand, and you can be strategic about for things like taxable events. And when things go crazy, what is going to be a hurdle for you in this process of cashing out your crypto? So the first thing you should understand is, okay, let's say, for example, you have Ethereum and you'd like to trade your Ethereum for fiat. Would you trade your Ethereum for a stable coin to lock in that high price and then move that stable coin onto, let's say, a centralized exchange, trade that stable coin for a fiat currency, and then send that into your bank account? I think the biggest thing that anyone should be determining here is based on your tax jurisdiction, who you have to pay taxes to. How do they determine what is a taxable event for your cryptocurrency trades? For example, some countries only tax when you are entering and exiting into the fiat realm, and crypto to crypto trades are not taxable events. Some countries tax all cryptocurrency events, and the timing that you are holding that coin would qualify you for either short-term capital gains tax or long-term capital gains tax. So if you want to sell Ethereum, and selling that into a stable coin first would trigger a taxable event, and additionally you're holding that stable coin for another short period of time, the volatility of a stable coin should be negligible. So selling that stable coin into fiat, let's say for US dollars or for euros, that should, you're not going to make much profit when you're holding it for short term. So actually that should be negligible, but it is another process that you'd have to go through, more transactions that you have to do, rather than just sending Ethereum to the centralized exchange and selling that directly for US dollars or for euros. And that brings me to my next point. Are you going to be using a decentralized exchange to lock in profits using stable coins, or are you going to be using a centralized exchange to enter into the world of fiat? And they're not perfect by far in this volatile bull run mania phase, when more and more people, oceans of people, are going to be joining up on these centralized exchanges. I'm going to tackle centralized exchanges first because we got a taste of it with Coinbase when Bitcoin was hitting $64,000, which, by the way, today at the time of recording, it's at $66,000. So the bull run is here. And that means the higher the prices go, more people are going to be piling in, and these exchanges and their support staff and their servers are going to be flooded with crowds. And that could mean that the exchange altogether goes down when you want to make your trade. You could try to place a limit order on a centralized exchange, and I do think that is a good practice, but that is by no means a guarantee. Again, if the trading desk goes down on a centralized exchange, no one's trading there. On the flip side of this, decentralized exchanges, yeah, you love it. You keep the custody over your coins, but every trade happening on a decentralized exchange happens on chain. And much like how the websites for the centralized exchanges are flooded with people, the blockchains of the coins that you are trading are also flooded with transactions. And that means transaction fees are going to skyrocket. If you thought the fees on Ethereum are high right now, just wait for 6 months from now. You're going to be wishing that you were paying $40 for a trade on Ethereum. But I do have some silver lining here. I have a strategy suggestion that you should consider that will help you mitigate a lot of these risks. And much like how you can dollar cost average into a position, you can also dollar cost average out of a position. Toby and I never advocate trying to perfectly time the top or bottom of the market. It's silly when you're looking at the grand scheme of things. difference in the amount of percentages that you're actually considering, and differences in profit if you would have sold here rather than there, especially if you miss it. So if you are trying to trade everything that you have in one trade on this one day and everything fails, that is one heck of a stressful event for you. And perhaps it's better for you to begin dollar cost averaging once certain price points are being met for your investments so that you can mitigate this and still be taking profit without maybe seeing the completely ridiculous skyrocketing transaction fees. And also, you're not trying to make your one trade that'll change your life. And at that moment, the centralized exchange goes down as well. I hope that this video provided you with a lot of insights, especially if you're new to investing in cryptocurrencies. This is your first bull market. I think this is something that you should be anticipating and preparing for, and security and all of that. I think having a strategy for exiting will plan it out now so you're not panicking and making rash decisions in the moment in the months to come. If you appreciate these types of insights and you want to get even more, I highly recommend you check out learningcrypto.com, home of the CT Club. We give you daily updates on what we think is happening on the market. We let you know when we are buying and selling our coins. We let you know which new coins we are looking at, and we're going to be telling you when we are selling to take profits during this bull market. For those of you who've been in the CT Club for the past 2 years now, you are primed and ready for this bull market. I am so excited for you. So let's get it.